morning and labas rytas in Lietuva. Tere hommikust in Estonia, labrit šeit Latvijā. My name is Peterson. I am a host of a podcast about economics, finance, and entrepreneurship. It's called Median Report. You can find it on YouTube. This time we are welcoming you all on the Baltic Capital Markets Conference in 2025. And we heard just a very beautiful panel from the ministers of finance, led by Uldis Cērps, one of the guests here, and also the representative from EBRD. Hello. Hello, gentlemen.
Hello. Hello.
So my first question is about the reflection on the panel. So how was it? And you as a moderator, what you took away from the panel?
I took away that there is a great political interest in further developing the Baltic markets, understanding of what needs to be done, a very European approach, and a capacity to be self-reflective over those things that have recently been implemented over the past few years, which have actually held back capital markets development, such as the second-tier pension reform in Estonia, and such as the increase of capital gains tax in Latvia. So I would say a very balanced, reasonable, and largely optimistic panel of ministers.
Yeah, first of all, I think one always needs to give credit for what has been achieved, right? And already having that pan-Baltic infrastructure is an achievement. And there's definitely a willingness to go the next step further. There might be different routes and there might be, again, different strategies. But again, this is always what you need. You need a debate. You need to struggle and come up with the right way. And I think this is, the positive momentum that there is a debate, how to actually advance. There might be discussions, what's the right way forward. But again, you need the discussion in order to actually come to consensus. And also the idea of, let's say, a unified regulator is another bold step. And I think also very strong then signal from the region to also institutional investors.
Yes, if I'm allowed to have my own reflection as well. I heard from the stage the financial literacy topic, which is, I think, reporting now for about 10-15 years on capital markets. I think it's one of the most crucial points because what I think we as stakeholders, we are pushing politicians to make decisions, and that's our job. But I think what they are looking, politicians, they're looking at their electorate, and what they're seeing, they are not seeing this demand for such action. So basically, now they are looking at electorate. We are looking at politicians, and so we are looking at each other and trying to figure out who is going to start the boost of the capital markets. And what I'm thinking is maybe next year in no disrespect to ministers of finance, but maybe next year we should kick off the event with economics teachers, with maybe trade union representatives, with industry association members who are pushing this information, this financial literacy.
I think it's incredibly important to continue strengthen financial literacy with all kinds of measures. When it comes to electorate's demand, I think it was very telling what Prime Minister noted this morning, that 62% of respondents actually support IPOs of state-owned companies.
But those are active investors. Those are not. Those are.
No, that's not a survey of investors. It's over 1,000 people. These are not investors. So these are voters, effectively. So basically, majority of voters support IPOs. If you ask question differently, that number even increases to 72%. So in fact, there is, I would say, a broad support for deepening capital markets, and I think that's a misunderstood paradox here. When politicians talk, they sometimes say, but privatization of state-owned companies through stock exchange cannot be an aim in itself. Actually, it's wrong. It can be an aim in itself because it is a very important catalyst for everybody else. Normally, no, but in this case, yes, it is a catalyst. And the other point I wanted to make relates to people's awareness. If you look at many sociological opinion polls, and where people are asked, do you own shares? And they say, no, I don't. In fact, if you look at percentage who actually owns shares through second-tier pension funds and third-tier pension funds, we're talking about hundreds of thousands of people. So in fact, there are many people who do own shares, who are participating in capital markets, but perhaps they're not even aware of it.
They are not aware, yeah. Your thoughts? Who should kickstart the?
Well, first of all, the point of financial literacy, right? Again, how do you measure this? And does it really become impactful if your entry barriers remain high? Let's say if I might be financially now literate, but if, let's say, capital gains tax regulation is complicated for me personally, I say, God, do I really want to go there? So simplification, lowering the entry barriers next to financial literacy is equally important. I think that is where one also needs to make an effort in simplifying this for retail investors, because at the moment, if I go to my bank and I put it into deposit, that's easy, right? If I now need to start to invest in a fund and so on, or in equity, that becomes more complicated also tax-wise. And this is, especially for lower income, something that needs to be lowered. And then I think it could work. But financial literacy in itself, yes, it's important, but it's definitely not the sole remedy to the problem.
Yeah. What about economic growth? Moderator Karl Otz mentioned it at the end of the panel that we haven't seen substantial economic growth, and he mentioned this Magnificent Seven. If we take away Magnificent Seven from the stock market, then it's not so attractive anymore. What about economic growth?
Yes, for economic growth, again, the countries need to focus on what are they strong. It's human capital. It's like innovation. This is where further investments need to be done. This is what needs to be promoted also to institutional investors. And you need private capital from, let's say, international investors that actually believe, let's say, in the human capital and, let's say, the wealth and the asset of human capital in the Baltics, and the reputation is extremely strong. And build on this asset and to attract then international investors. And it's a niche. The countries are small, and they need to more or less find, let's say, the selling point as a niche player in the international market.
I know that EBRD is holding also some shares, equity here in the Baltic countries, in the companies. Are you in some ways also encouraging these companies to issue bonds at one stage, or have an IPO or something like that? Are you proactively having this policy?
It always goes hand in hand. Let's say we have our holdings. It might be, of course, it might be loan, it might be in equity, but at the same time, it is about developing the private sector and developing also the capital market. So therefore, it is part of our DNA to talk to our clients and the projects where we invested in order to actually give them other opportunities in order to issue a bond or go towards an IPO. An IPO is from our perspective, a great tool for further mobilization of private capital. So we are not there to stay. We are maybe an anchor investor that is actually then attracting other investors. So we add credibility to a project, and we hope we have a halo effect in this regard. And therefore, when it would come to an IPO, we would say, well, that's a great success because we can more or less reduce our share and mobilize instead the private sector capital.
And it's in your DNA, as
It
you
is.
said. Yeah. All this, I know that I asked you this question last year, but I still will ask you this year as well. Can banks help to boost capital markets? And in what way, maybe during a year, you have seen that this has happened in Baltics?
I think they can definitely boost capital markets in several ways. One way is very direct. Banks often are owning pension fund managers. And these pension fund managers can, in many ways, through their investment decisions, facilitate capital markets. And especially now when we in Latvia have a more favorable regime for investing in alternative investment funds where you actually can charge higher management fee if you do that. That creates stimulus. Because in the Baltics, since equity markets are shallow, the best way to funnel more money into economy is through alternative investment funds and these type of venture capital and private equity investments. And we have enabling framework that it allows to channel pension money into these type of instruments. We have also recently in Latvia agreed to create a dedicated equity fund, about 100 million euros for investment in equity in companies that have high growth potential and are not only from Latvia but also from the region. That is another example. I would say a third example is all the educational initiatives banks are doing on a regular basis with their customers in explaining the advantages of investment. And I think that is happening across the board. And maybe a final point is that you need to have dedicated investment banks who actually see development of capital markets not as idea but as a business. I think Signet is one such example where they have taken a business decision that they will go all in and facilitate bond issuance, and I think their market share is now very, very significant. And we need more actors like that.
Yes, Uldis, Burkhard, thank you very much for sharing your ideas, sharing your insights. We are coming back to conference very soon. We'll have discussions on IPO later on bonds. So thank you very much, and see you back again very soon.